Well, everybody, Cantonese Cat here. I'm gonna do something a little bit different today. Instead of playing my usual jingle, I'm gonna keep the mood a little bit low. I'm gonna be less jingly because I think that might be a little bit too celebrative. And there's not really any particular reason to celebrate yet. And matter of fact, I actually don't think that on green days you should celebrate too much, and on red days to cry too much. But I do want to keep the mood a little bit low. I'll keep the trading view a little bit darker. So if you want to hide in bed, if you want to cover yourself with a nice pillow, relax your neck muscles, cover yourself up with a nice warm sheet, got a warm glass of milk right next to you, feel free to do that. We're going to keep it dark and nice. I'm going to go through economic cycles here a little bit. But before I do that, I do want to say it's been absolutely an insane ride for my account on X, which is getting close to about 14,000 people. And the more follow us, quote quote, I get, this makes it sound like a cult, but I don't, anyway. The more followers I get, the more people comment on my post with a lot of various absolute statements as comments. And they mean well, like the overall majority of them mean well. And that's the whole point of having X anyway, is to share your point of view. Everybody wants to kind of contribute, everybody wants to tell you what they're seeing, what they're thinking. There are quite a few things whenever I try to show something, it's almost like whenever you have a reaction, you're going to have a counter reaction. Whenever I try to show something, for example, I'm showing cycles, there are always going to be people that are going to come out and saying this cycle is going to be, different. Matter of fact, I don't think it's really a cycle. You really need to just follow the news. You need to follow what's going on out there. Everything going out there right now is new that we've never experienced before. Like, the conflict in the Middle East, the Fed, messing around with rates, a bunch of Fed chairmen coming out and talking here and there, inflation reports coming out and people speculating. And then you have earnings coming out. A lot of people are trying to kind of speculate, but by saying, all these absolute statements. I've heard one big thing. There are a couple of things I want to dispute. First thing is, the people saying that, yeah, we've just gone way too far, way too fast. Out of this gate of becoming a bull market, we've just gone way too far, way too fast. Look at how far the current price is away from the 20-month moving average, for example, right? We touched the 20-month moving average back in October 2023. Matter of fact, we actually dipped below it and we back tested it when we got back above, and then we just kept going higher, right? And a lot of people are worried that, hey, this is moving way too far, way too fast. We're going to have a major correction coming. Based on what? Based on the Middle East conflict, based on the Russia-Ukraine conflict still going on, based on your fear that oil is going to go up. I'm going to show you some data in a sec. Based on your fear that inflation is going to come back, because that's what the narrative has been over the last couple of years. Based on what exactly? The things you're saying, I guess, make sense. It sounds good because you're trying to protect us from what could happen. But this is just a normal bull market compared to the past. If you want to make the argument that this last cycle over here from, March of 2020 all the way through beginning of 2022, if you want to make the argument that this happened right here because the Fed just kept printing money and this is artificially being propped up, I have a couple of news for you. One is that you're not wrong, but that also led to a very, very severe correction where the S&P 500 dropped down by more than 20%. NASDAQ dropped by about 30-something%. So we already had the correction that is necessary for you to deleverage and for you to resume the bull market moving forward. And these kinds of little bit overextension above the 20-month moving average has previously been seen before. And when it happens, sometimes you have a little bit of a correction, but it can keep going, is my point. Because if you argue that the last cycle was atypical, what about the cycle before that? Look at how far extended we are from the 20-month moving average. Okay, so two samples don't make it right. What about the third one? Look at how far over here is away from the 20-month moving average. It can stay away from the 20-month moving average for literally 2 or 3 years before back testing it. It can stay away for about a year, year and a half before back testing it. You can stay here for about a year and a half before going underneath of it. It eventually seems like this is going to be a magnet and drag it up higher anyway, because the Fed keeps printing money constantly, sometimes faster, sometimes slower, because the government always spends more money than they can afford anyway. Sometimes faster, sometimes slower. You know when they're going to stop printing money? Never. You know when sometimes they decide to do these quantitative tightening? Is when things are just gone a little bit way too fast, the economy got too overheated, and innovation is not able to catch up. The natural economic cycle happens to correct things and to deleverage things when things just simply gone way too far, way too fast. But there has been tremendous innovation over the last few years. Our lives have drastically changed over the last few years. And there are a lot of development of new technologies that are going on right now that is constantly changing our lives. This allowing the Fed to print money because it's creating deflationary forces that the Fed needs to counteract by printing more money. It's a side effect of keeping us happy, looking at the 401k going up over time, and also us not revolting against the government. If you think that this over here won't sustain because this over here was not sustainable, while it's sustained for quite some time, similar thing happened the cycle before that, similar thing happened the cycle before that. It all goes back to this guy over here, the great financial crisis. What allowed over the last 3 cycles, and now we're going on to the 4th cycle, what allowed these cycles to continue to go up over time, as opposed to having one of these big deleveraging events such as the dot-com bubble and the great financial crisis? First, all these things probably happen maybe once every like 25 to 30 years anyway. You can occasionally have like a lost decade, but something has to go seriously wrong, right? The one thing happened in the great financial crisis that people really don't think too much about, and I'm getting a lot of comments talking about how this is not sustainable because the banks are doing things that are just completely unethical and are unsustainable, and they are being over leveraged. To me, I'm not going to disagree with you with these points. I do think that there are a lot of weird practices, I should say, when it comes to the financial system, especially the traditional financial system, that is still being kind of supported by the US government and by the Fed because something happened here. Because of the great financial crisis, something has happened drastically that has changed the fundamentals of this phase of the economy. I would call this phase of the economy the era of fiscal irresponsibility, because we are able to carry through this fiscal irresponsibility moving forward because big banks can fail. They've already proven to us that they're willing to do whatever it takes to backstop any big banks from failing to cause any major financial crisis. And because of that, we have over the next 15 years of pretty much up only. Even when we're having a lot of these different crises along the way, it's been pretty much up only because big banks can't fail. The only big hiccups that we really saw was the COVID shutdowns, but they quickly reversed that. And also with the inflation issues that we're having, but we are also reversing that as well. If you look at just the S&P 500, you barely see these cycles because the printer is relatively steady. quantitative easing is relatively steady. But if you want to look at a little bit more sensitive measures of these cycles, you have to look at the small caps, because the small caps are just going to be a lot more sensitive to these economic cycles. And another thing that's going to tell you a little bit more about the economic cycle is Bitcoin. That's also going to be a lot more sensitive to economic cycles here too. But for the sake of illustration, you can see that this is the IWM, which represents the Russell 2000 small caps. And you can see that we've had these big drops and big pumps going up and down, and it goes beyond the whole, increased crazy liquidity of the 2021 cycle over here. This is basically just a part of the economic cycle that happens. If you go way too far, way too fast, you're going to end up correcting a little bit more. And we've corrected sideways for about 2 years now. I would argue that this liquidity has already been absorbed and it's been distributing. And right now, the whales have been really accumulating for about 2 years, and I think we're ready to start another economic cycle again. It basically is a straight line up after the great financial crisis had happened. After basically they're just going to go through any fiscal irresponsibility to make sure that there's enough money flooding the system. The key thing too is, where are we here at this new cycle? In the new cycle, I'm going to define that by a trend change of the 20-month moving average from pointing down to pointing up. And we just started having this pointy up T right over here just a few months ago. Before that, when was that? Around here, a little bit pointy up T over here, right? Before that when was that? A little pointy up T over here. Before that, when was that? A little pointy up T over here, right? So you get about 3 cycles already ahead right here that you're seeing, right? Where are we? Before a big move up like that, at the beginning of the bull market, where the 20-month moving average is starting to curl up, you're going to see some pretty brutal volatility. Like, can you imagine how brutal this volatility was over here? The interesting thing too, usually these things start with a big drop and then a smaller drop and then up, right? Big drop and then smaller drop and then up, right? I would argue this is the big drop and this is maybe the smaller drop right here and then up, right? Right now, I think we had a big drop and we're going through a couple of smaller drops over here. Very similar to these areas over here, although this over here may not have been as bad and this over here may not have been as bad, but so far it's just kind of been whiplashing over here. Can you imagine how much pain that everybody's kind of feeling just when you think that things are going up? The biggest problem is not so much whether or not what you're in is going up or not, but the biggest pain that most people are suffering is not that. It's because they always compare themselves to other people, because they always compare as to what could have been, what they've missed. A lot of people are really kind of upset that they miss the large cap rallies over here, right? By being over here, and you've been whiplashing down here for nothing. Look at, like, you could have easily just put your money in S&P 500 or just keep on going up, right? If you want to leverage the S&P 500, that's fine too. You could just keep on going up, right? But here we end up having a lot of whiplash over here, and this is just a part of what you're gonna be exposed to whenever you want to get into assets that are a little bit more sensitive to the economic cycle, such as things that are a little bit riskier, things that are a little bit more sensitive to debt. A lot of these companies in smaller cap, they're more likely to be under debt. And that's just part of the risk that you're being exposed to. And then that's okay. You're going to look over to other people. You're going to look over to the NASDAQ, the QQQ series, saying you're going to miss all this move right there. You're going to put your money in NVIDIA. That's not really like a very healthy way to think. You're investing in something that you believe in. And you're also investing in something that you are seeing that it could actually end up catching up or potentially even outperform the S&P 500 or the NASDAQ, potentially. What you're seeing here is that it is still the early phases of the bull market. And I've made another video. I can show you like the Ishimoku cloud and all the other stuff. Like, it doesn't really matter. I do think that this is the beginning of the liquidity cycle because small cap always underperform for a while. Small cap always underperformed for a while compared to S&P 500 until it doesn't. So for example, like this over here, right? You can see the S&P 500 goes up higher, right? But eventually, the small cap's going to catch up a lot faster when the velocity of S&P 500 actually just, kind of goes through the same kind of thing. The small caps over here, a little bit laggy, right? And over here, you're seeing that there's already kind of made this all-time high a lot faster from this drop. And this just happens over and over and over again. This is where you are at right now. And I think it is a very, very similar cycle as we've had before, where S&P 500 is going to outperform here initially, but eventually going to have some rotation over. There are going to be a lot of fear and uncertainty and doubt that's going to happen to people who are investing in more speculative stocks like the small caps. And you actually want that fear, uncertainty, and doubt because that is actually what fuels the prices to go up higher. That is actually what is necessary for you to have a more sustainable bull market for a longer term, is when you have fear and doubt. Right now, people are feeling pretty bad if they're invested in smaller cap stocks, if they're investing in more speculative assets, and they're just kind of looking like, hey, why didn't I do that? Why didn't I do this? It doesn't matter. I mean, if you want to do that, you can sell all these speculative assets and just go to the more, safe stuff if you want to do that. But one thing for sure is that the whales are greedy. The big money, they're greedy. And they're patient. What they end up doing is they end up spending time to cause you to deleverage, cause you to trade your underlying assets to them, and they're going to end up accumulating it. And when they've accumulated enough, they're going to let it go and just kind of let things happen. During the accumulation period or the reaccumulation period, generally is when the fear is the greatest. And it's generally when the volatility is the greatest too. But make no mistake, things are being accumulated right now and has been under accumulation for quite some time. And what happens generally after a long period of accumulation, these greedy whales, they want to make money, they're going to pump it almost without fail. It may not be to the same velocity that you think is going to happen over the last cycle, but it's probably going to be around the same velocity that happened around the cycle before that or cycle before that, because these are just normal economic cycle that happened after the great financial crisis, after this huge deleveraging over here, and after basically you're told that, hey, banks can fail, so you guys are good to go. I think most likely the cycle is not going to match anything like the last cycle, but it's probably going to end up being very similar to the cycle before that or the cycle before that. We're still early, and you're going to end up having a lot of whipsaw, just like you did over here, just like you did over here, especially. I really don't know why people would say that the cycle has topped. Like that actually doesn't make a whole lot of sense based on the past behavior. And some people would say, oh, past behavior doesn't really predict what's going to happen. But there's a lot of cycles before that you can look at. The whales have very predictable behaviors. They are greedy. They sell at the top and they buy the bottom and they accumulate and they try to do the same thing over and over again. They're going to keep doing this for as long as they can. I don't see that changing anytime soon. Some people also say, the crypto cycle might also be over. I don't know why that would be the case because I think we just have a confirmed bull trend. And I think this bull trend could end up being sustainable for quite some time. Right now, it's just a little bit of a correction of a previous, all-time high over here, which is completely understandable. You have very similar corrections over here to test this high over here. You have a very similar correction here to test this high over here. If you have to ask me where I think we are at the cycle compared to the last, I would say this right here is probably, relatively similar to maybe over here or maybe over here or here, right? So I think we're probably like either 30 to 40 or 50% done. But these moves over here is probably not going to be as impressive as the moves that you might end up getting over the next year. And the moves that you're going to get potentially over the next half a year. I'm not really that worried that we have topped. And again, I've made a lot of different videos before to kind of belabor the point. But I just want you to see the bigger picture. Especially if you look at the IWM, I want you to see the bigger picture. Can price drop all the way down to like the 180s and still for it to be a bull trend? Yes. Does it have to go all the way down to the 20-month moving average to go up further? No. I also want to show you a lot of different confluences over here too, especially the NASDAQ, the QQQ. If you look at the weekly, and on the weekly, you already automatically have the 20-week moving average there being pointed out here is pointing way up, right? So it's going to be a bull market over here, as opposed to be a bear market down here. In a bull market, it's completely normal for price to roll over a little bit and touch the 20-week moving average, or even dip down below a little bit and wick down below before its bullish continuation. In a bear market, same thing. It's normal for a bear market to have these bear market rallies to touch it and get rejected, and touch it and get rejected, right? Same thing happened to the bull cycle over here. It's just been touching 20, 20, 20, 20 on this way up. Sometimes kind of wicking below it, sometimes just kind of touching it. Kind of like what we're doing right now. The cycle before that, same thing, right? 20, 20, 20. The cycle before that, same thing. Right now, we're just at the point where we're touching a red and rising 20-week moving average for the NASDAQ QQQ. And the S&P 500 is not even touching it yet. It's like, can it go lower? Sure. Does it have to? No. Look at what it did before. It just kind of ride the 20-week moving average up, ride a 20-week moving average up, ride a 20-week moving average up. This is bull market behavior. Like, this is exactly what is supposed to be doing. I think it's probably going to end up riding it up too. Do I care about the little tiny bit of volatility? Do I care even if it kind of dips down below? It looks like it's going to backtest and go down further. Everybody's all scared over here. I don't care. Is it going to go down all the way back and kind of touch the previous all-time high over here before bullish continuation? Sure, everything's possible. But just look at what happened before. Like, these bull market can be very, very long. And touching the 20-week moving average is really no big deal. And for the S&P 500, we're not even really close to doing that. For NASDAQ, we did it this week. So far, the volume is not like super high or anything, but we did it this week. For the IWM, we fell underneath of it. and that's okay, because the greater trend is still up, right? And even for IWM, even for the other cycles, you can fall underneath of that briefly. I think it's okay. Like, nothing is really broken if you keep a more of a bird's eye view, if you just look at how the 20-month moving average is changing velocity during each of these cycles. I think we might still be at the beginning of it. And right now, there's a lot of people that might end up getting freaked out by a big bearish engulfing candle over here, right? I want to tell you a trick. When you're looking at a lot of the candle patterns on the monthly, they may not work out. I'll tell you why. For example, you see a bearish engulfing candle over here that didn't really quite work out, did it? Right? For another example, you see these things like a 3 black crow kind of pattern, which is suggesting things are going to go down a lot further. It didn't work out, did it? It only took about 2 candles to just completely reverse all this negative price actions over here. I just want to say this. Sometimes it just takes like a week to reverse this red candle over here. Sometimes that's all it takes. Sometimes all it takes is just a couple weeks for it to go from where we are right now all the way up to like all-time high and beyond. That's sometimes all it takes is just a few weeks for that to happen. And if you're bearish, and if you end up misreading a bull trend as a bear trend, if you end up selling and capitulating, and if you end up waiting for confirmation, there's a possibility you might miss a big giant green candle over here or a big giant green candle over here. Can you imagine how bad this month was? The people that are experiencing it? It was pretty bad. Next thing you know, I have a big giant green candle over here. Can you imagine you missed this big giant gap up over here? Back in like, January 2013. Can you imagine after this gap up, you're like, oh, there's a big gap here to fill. I'm gonna wait for the gap fill before I buy back in. You'd still be waiting right now. The gap still hasn't filled all these years. So the natural tendency for the market is to go up, and if you're going to make a mistake, I'd rather make a mistake as a bull rather than a bear, because in general, the win rate is just going to be a lot higher. I still think that this candle over here, again, the month is still early, we still have a couple weeks, but I still think that this candle over here, it could end up going lower, next month could end up going lower, and I don't really care because this is just a part of this cycle. If you believe in cycles, which I do, this is just a part of this cycle where it does its thing. I have plenty of other videos with other indicators to show you that that's the case, but I just wanted to share my thoughts as well as trying to help you to meditate a little bit here. I hope you listen to this video on 2x, because I just intentionally kind of slow down here. I just want to talk and share you my thoughts. And it's been about 26, 27 minutes. I just wanted to talk a little bit about the market. I do want to share a couple other things with you before I go. I just really wanted to talk about oil. Is oil going to keep going up higher? You have something called a shooting star candle so far in April of 2024 is being developed, despite of the fact that you have all of these Middle Eastern conflicts that are on the news, and people are afraid that oil is going to keep pumping up. This is generally a pretty bearish top kind of candle. We'll see what happens, but this is not a good look for oil so far. Guess also what happened back in Ukraine and Russia conflict when it started around February of 2023. Everybody was expecting it to go much higher. It ended up going much lower and tested the 60s. So for whatever reason, I guess when you're having a conflict in oil-producing country, it actually causes oil to go down. No, I'm kidding. That's not what I meant. What I meant was that these prices don't necessarily correlate with what the narrative is. And the more and stronger the narrative is, sometimes it might actually be a counter-trading signal. So I don't buy it. I mean, I don't really know about the whole inflation narrative. A lot of people also talk about the GSG, right? This is the commodity index. A lot of people have been really absolutely scared because of the bull market that GSG had, and that brought into a lot of fears for inflation. The GSG is also experiencing a very similar candle over here that looks just like a shooting star top candle. Generally is a little bit toppy. And I'm just not sure whether or not this is going to be sustainable, because it does look like they're distributing. What I mean by that is the sell volume has gone up and buy volume has gone down. This looks like a distributive type pattern over here. Anyway, I'm done talking because I just wanted to show a few things and put you to sleep. I hope you listen to my video quickly, because today my energy level is super, super low, and I'm putting myself to sleep right now. I hope you enjoy your sleep listening to me talking about the market in the dark. I'll talk to you again tomorrow. Have a good one. Bye.